Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. Our focus this week is on Nigeria's Q2 2025 GDP performance, sectoral insights, opportunities, and outlook. The National Bureau of Statistics recently published the second quarter gross domestic product GDP, which showed that Nigeria's economy recorded an impressive performance in the second quarter of 2025, posting a 4.23% year-on-year growth in real GDP, an improvement over the 3.48% growth recorded in the same period in 2024. This was the fastest quarterly growth in 4 years, driven by a rebound in oil output and steady non-oil gains, especially from services and industry. Oil production rose 19% to 1.68 million barrels per day. The non-oil sector, contributing 96% of real GDP, grew by 3.6%, reflecting ongoing diversification, with industry shares rising to 17.3%, while agriculture and services remained key pillars. This performance aligns with ongoing reforms, including improved oil output and fiscal stabilization, positioning Nigeria for a sustained recovery despite global headwinds such as volatile commodity prices and geopolitical tensions. This is a breakdown of the top sectors that shaped Q2 2025, their opportunities, and the medium-term outlook. 1. Oil and gas, stabilizing supply, deepening value chain. The oil sector was a key highlight of Q2 2025, expanding by 20.5% year-on-year in real terms. Average crude production rose by 1.68 million barrels per day, higher than the 1.62 million barrels per day recorded in Q1 2025. The broader mining and quarrying sector also benefited from this rebound, growing by 20.9% year-on-year. Oil contributed 4.1% of real GDP, up from 3.5% in Q2 2024. Opportunities: rising crude output and improved global oil prices enhance fiscal revenues, boost FX inflows, and support external reserves. The startup of the Dangote refinery and progress on modular plants signal a major shift towards domestic refining and reduced fuel imports. The government's gas monetization push through LPG and CNG projects also opens new revenue streams and supports the global energy transition, creating investment prospects in gas processing, pipelines, and power generation. Outlook: the sector's outlook remains positive, driven by stable oil prices, improved production efficiency, and policy support under the Petroleum Industry Act. Sustained growth will hinge on OPEC Plus compliance and Niger Delta security, while rising output and local refining should boost exports, revenues, and reserves. 2. Agriculture, transitioning from subsistence to scale. Agriculture grew by 2.8% year-on-year, higher than 2.6% recorded in Q2 2024. Crop production remained the primary driver, accounting for more than 57% of the sector's output. Agriculture accounted for 26.2% of real GDP, maintaining its position as the largest contributor, despite being slightly lower than last year's 26.5%. Opportunities: mechanization, improved input access, and agri-fintech solutions are helping farmers access credit and expand their operations. New processing facilities for rice, cassava, and oil palm are adding value, while investments in irrigation, fertilizers, and cold chain systems will boost productivity and export potential. Outlook: while agriculture will continue to anchor growth due to its scale, insecurity in farming regions, logistics bottlenecks, and climate-related risk may constrain higher output. 3. Trade, riding on consumer resilience and informal sector debt. Trade, one of the largest non-oil activities, posted 43.8% nominal growth, reflecting strong consumer spending, though real growth was modest at 1.3% year-on-year. Trade contributed 18.3% of real GDP, second only to agriculture. Opportunities: urbanization, a growing middle class, and expanding e-commerce are transforming retail, while digital payments and logistics technology are improving efficiency and formalization. Outlook: consumer spending will stay vulnerable to inflationary pressures. However, if inflations continue to ease and household incomes stabilize, trade could experience a stronger real sector expansion. 4. ICT, the digital backbone of the economy. The information and communication (ICT) sector continued to stand out as a structural growth driver, recording 6.6% real growth compared to 4.4% in Q2 2024. Telecommunications and data services continue to be the primary growth engine. ICT contributed 11.2% of the real GDP, up from 10.9% in Q2 2024. Opportunities: telecom expansion, fintech innovation, and broadband growth are fueling new opportunities in data services, cloud computing, and e-commerce. Nigeria's vibrant startup ecosystem continues to attract global and diaspora investments. Outlook: the sector is poised for sustained expansion as digital adoption widens. Improved regulation, investment in broadband, and better power supply will support momentum, though cybersecurity and infrastructure gaps require attention. 5. Finance and insurance: deepening inclusion, strengthening resilience. The finance and insurance sector was among the strongest performers, growing by 16.3% in real terms and an astonishing 63.7% in nominal terms. Financial institutions accounted for nearly 88% of the sector's output. The sector contributed 3.3% in real GDP, up from 2.9% in Q2 2024. Opportunities: recapitalization, regulatory reforms, and financial literacy are boosting innovation in payments, credit, and asset management, creating attractive investment opportunities. Outlook: the outlook is strong, supported by technology-driven inclusion and stable earnings. While high interest rates may limit credit growth, continued digital adoption and new financial products will sustain profitability and deepen financial intermediation. 6. Construction and real estate, infrastructure-led expansion. Construction recorded a 5.3% real growth, supported by both public infrastructure projects and private real estate development. The sector accounted for 3.6% of real GDP, a marginal improvement from 3.6% in Q2 2024. Opportunities: government's infrastructure spending on roads, power, and housing, alongside private sector real estate projects, are set to fuel long-term growth. Urbanization trends and mortgage product development also create opportunities. Outlook: the sector's medium-term prospects are bright, anchored on public infrastructure and private housing growth. High financing costs may slow activity, but stable policy and access to long-term funding will sustain momentum. Broader macroeconomic perspective: Nigeria's growth outlook for the remainder of 2025 remains cautiously optimistic, with GDP expected to increase by approximately 3.9%. Robust oil production, expansion in ICT, and resilience within the financial sector will support growth, though inflation and foreign exchange volatility continue to pose risks. For investors, opportunities are increasingly driven by specific sectors. Equities in banking, telecommunications, and agribusiness offer value. Fixed income remains appealing due to high yields, although these are dropping, and private equity shows strong potential in agriculture, logistics, renewable energy, and digital infrastructure. Overall, the economy is transitioning towards sustainable technology-driven growth, sustained by the steady performance of non-oil sectors and renewed sense of investor confidence. Thank you for listening. Please join us same time next week for another interesting, exciting, and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.